Well, all eyes are on the EU summit today, and some saying that it isn't the place for details to be hammered out, but what the markets will need is some kind of confirmation that a deal would be forthcoming. Let's explore the alternative scenarios here. I mean, what are the implications for the market if we do, and then if we don't see any confirmation?
Alicia, I think that is exactly the case. The market desperately needs some certainty out of the EU summit today. I do agree that I don't think we'll necessarily see any specifics coming out of the announcements today, but what the market needs is a firm intention from the EU summit that they, as an EU, will stand together and will support all members, including obviously Greece. I think what we need to see is that they will specifically say that they will support them. That obviously means a bailout, but that should also mean that they will not only support them, but that they will support any other countries that might also find themselves in a similar situation. We need confirmation that the potential contagion will be spread. Contagion potentially to the PIGS countries, a very unfortunate acronym, but which references to Portugal, Italy and Ireland, Greece and Spain. And what we really need is an indication maybe of how this might be done, but even if they are short on specifics, some firm intentions that will show us that the sentiment that we've already seen starting to turn in the Greece equity market as well as in the European currency markets is justified.
Certainly an acronym that's being very cleverly used when it comes to actual metaphors. We had RMB, a currency report this morning, saying that what we don't want to see is pigs being turned to bacon. Let's take a longer term view here. I mean, what's your perspective moving forward in terms of how you see things playing out and how long we actually going to it's going to take before we start seeing some stability actually coming to the fore?
Markets always want certainty rather than uncertainty, and I think what we're seeing in the reaction in the Greece equity market this morning is certainly an indication of that as soon as we see some confidence returning to the market, we will see the positive moves coming from that. The euro's movement against the dollar and against the cross currencies also is indicative of that. I think what we can expect is, if they come out with the positive statements today, one of unity and one of support for Greece and its fellow countries that are in difficult situations, is that we will see the confidence return to the European region, even though the actual bailout and the actual support might take a much longer time to transpire. That certainly will lead to a stronger euro and some weakness in the dollar, and as you've just pointed out prior to the crossing over, is that will be positive for the rand as well. What will that mean for other markets? Well, it certainly has been supportive for equity markets. We've seen the positive sentiment so far, and of course for commodity markets, with a dollar being slightly weaker, that will also be supportive for the commodity markets.
Of course, that adding, Nerina, some support now, but there's also what's adding further impetus to sentiment today is that the prospect of lower interest rates across much of the globe continues to be reinforced as well. But what's interesting is that we're starting to see some diverging noises when it comes to monetary policy on a global scale here.
It's very important, and we must remember that the primary source of this problem is a debt-related one, and it's really been the monetary easing that has been keeping this ship afloat. Last night we had comments from Bernanke for the first time indicating that he might be starting to think in terms of how rather than when he will be stepping away from the very tight or the very easy monetary stance that he's been enjoying for the last couple of months and years. This was the first time that we actually had any indication from the Fed that the very, very low interest rates in the US will not last forever. He certainly indicated that it will still be around for a very long time, but indicated that he might start looking, the first steps would be to ease the discount rate from the Fed. But at the same time, we actually had further indications from the UK that due to very low inflation rates there, that they might be looking at further monetary easing. So for the first time, we're actually finding that there could be divergence in terms of monetary policy. And if we look at the debt problem that we see in not only in Greece, but certainly elsewhere in Europe and the world as well, I think the very low interest rates will still be with us for the foreseeable future.
Very quickly, that on a global scale, what are we looking at locally, where we're looking at the State of the Nation address coming to the fore this evening? I mean, how closely are markets watching that?
I think it's very important for markets, but unfortunately, as with most other political speeches, and as we'll see with the EU summit as well, probably going to be very low on specifics and high on promises. I think it's a time to revisit the promises that were made a year ago in terms of the 5 important factors that President Zuma said he would be focusing on. And I think at the forefront for most people is the issue of job creation. For the economy having come through a recession, job creation is still one of the biggest issues, and the focus really is in terms of manufacturing and in terms of production, in terms of industries that really need to provide the jobs for this economy that we so desperately need. And we would like to see that there may be some announcements in terms of incentives that would actually lead to some job creation in our economy.
In the meantime, Nerina, on the company news side of things, we've seen that De Beers has bolstered its balance sheet with a $1 billion rights issue, and the bank refinancing has swung it to an annual 220 million underlying loss. Market reaction to that, because there is certainly implications, of course, for Anglo American as well, which is set to release results next week.
Yes, a very important implication for Anglo American, because they have already announced that they will take up their full rights in that rights issue of De Beers. This, of course, follows on very shortly on the rights issue of Anglo's other holding that they've got in Anglo Platts that was announced last week. Now, the interesting impact here for Anglo's is really that the impact that it has in terms of its prospects of paying dividends. We've recently seen dividend declarations by all of its large competitors such as Billiton, Rio and Xstrata, and the market is now very keenly watching what Anglo's will do in this space. Currently, the expectation is that it's unlikely that Anglo's will be paying a dividend, and this will certainly put it on a very disadvantaged position relative to its peers who have now all paid dividends in the current cycle. We must just bear in mind that not all of these rights issues are necessarily cash rights issues. In the case of Anglo Platts, it's a debt to equity swap that we're looking at, so it's not necessarily a cash requirement that they have there, but it certainly will inhibit Anglo's in terms of their ability to pay a dividend in this round. Well.